Yeah, new show. I stopped counting, to be honest. Like, who cares? It's a new market cap, new week, should be number 8. Right. Okay, we're right on track for number 10. Um, and many more, of course. So yeah, market cap, your weekly show where we cover what's going on in the markets, cover the news, any relevant price action, but also have more in-depth discussion, right, about like what it all means, what it might signal to the market, what's going on, where the market is moving. Yeah, we're doing that this week with our own team. Uh, Last week we had on Resolve, very interesting conversation with Ivan on mostly stable coins. Yeah, that was awesome. Um, as well, Dochikovsky, everything, all the greats. Next week, actually, we'll have on Foresight Ventures, so I'm really looking forward to that one. But this week, it's Alea chats only. So we got Daniel, our lead researcher. We got D, researcher and prime contributor to the show, and then we got Kirk on as well, our director of protocol services, and I'm Stefano, director of institutional services, and I'm
Oh,
Don't steal my
too many
thunder.
people,
Don't
too
steal
many
my thunder.
titles. We divide and conquer, man. Yeah, I'm your host and moderator for the show. Yeah, introductions. Yeah, I think we covered everything. We can start kicking it off, guys. Let's have a look at what's going on in the markets. Feel free to take it away. I'm gonna grab the link to the beautiful heat map as always.
yeah. Heat map's looking good, looking nice and green. Yeah, I think that's what I like to see. I don't know. I feel like it's a little bit of like a bear trap. I don't know.
Is there a bit of relief for the .eth?
I mean, it's right under 100K. Like, I don't know, fingers crossed, but I don't know. I just feel like I'm not optimistic of extending far past 100K. I don't know. I think it's a good. Well, yeah, they have the Besant meeting with China to discuss some trade stuff today. So that could be like really good or really bad. So I don't know. It could go either way. But I feel like it's not going to just stay at 99.4. Yeah. So hopefully, things can go up. But yeah, even ETH having a good time, having a nice little bounce back. XRP finally cooling off, and yeah, I mean some alts, more varied response from the alts. Some AI stuff doing okay, some AI names not doing okay, and yeah.
I think it's weird, right? For so long we were conditioned over the last 3 months, even a hint of outperformance in ETH, you may as well go and write your will to your family. Tell them, this is it. I'm done.
Yeah.
ETH's outperforming again.
Right below 2K. Yeah. Approaching that level.
We need to remortgage the house. We're done. This is over. But is this maybe a bit of salvation for the .eths out there? Some people might even go as far as calling the 100th top of Bitcoin dominance, or is it the giga nuke looming in front of us? I mean, everyone prays that perhaps this is the slight cooling in Bitcoin dominance, and there's a lot of positive RWA developments coming out for Ethereum. But I guess one of the most simplistic things you can always overlook about ETH is it hasn't really ever had any serious downtime. I know with Solana there was a big update that happened recently that a lot of people weren't happy about, and maybe it's time. End the pain for the .eths. Who knows?
Right. We forgot to kind of include this, but yeah, of course, like ETH had like that very big update, Pectra. So that's probably playing into all of this, right?
I think it became slightly deflationary again. Can you pull up that chart, Jamie, of the ETH? What is it? The ETH dot, is it ETH burn fees or whatever it is? Do you know the one I mean?
What was that? A Joe Rogan reference?
Maybe. But is it ultrasoundmoney.fun or something where it shows you?
I know, yeah. You're talking about the site from from Justin Drake. I'm not sure how much that's playing into it. I mean, even before, like a couple weeks ago, you had a couple big days from ETH where it outperformed for one day. So yeah, I'm not really sure how much the upgrade is actually playing into it. I feel like the people who are very tuned into the upgrade and like bullish on the upgrade are already like they're max allocated, whether they like it or not. You know what I mean? Like I don't know that any net new buyers are like getting into ETH because of this. So well, yeah, I guess it's always good to see some upgrades rolled out, especially after, like at DevCon, they started rolling out like these 5-year plans. So yeah, good to see some stuff being pushed out. The flippening is that, yeah. Don't show that chart. Yeah, jeez. I can't believe that they have a dedicated section for that on the dashboards. That's a little.
Well, it used to look much different when they first developed the.
It did, yeah. It used to look much better, but I think it should be deprecated now. Yeah, maybe for 2025 it should be deprecated.
just like other ETH initiatives, they obviously don't care about marketing on the site. Just like the foundation. So I think that tracks.
I think Gainsey crashed out pretty hard as well. There's like a 1 minute, 2 minute video of him on Twitter, just crashing out so hard over ETH. And like, if for the contrarians out there, maybe once everyone piles into the boat that, any slight outperformance in ETH, we're going to nuke. And it was right for so long. But then, sometimes when these ideas become so consensus, there comes a point where, it can't just be that easy. If everyone is so prepared that the slightest hint of ETH outperformance means we're going to nuke, sure, at the start, it was probably a great trade. But then eventually, if that behavior continues, maybe you could make the argument that the trend breaks after a while. Maybe I'm just going to be a fool in a day or two's time if we've completely nuked after this, but I'll take that.
I mean, maybe. I think what's more likely is just it's more muted price action, and if Bitcoin goes higher, ETH goes up a little higher too. But yeah, I mean, ETH Foundation is just much less proactive when it comes to like reaching out to people, reaching out to funds, reaching out to Web 2 clients, right? So like several years down the line, if you had to like pick a chain that's going to be integrated with more like Web 2 use cases, stuff like Stripe, stuff like whatever it might be, institutions, right? Like which one would you think it would be? Like I don't know, maybe like I think Solana would have the edge. There's like much more like they actually care about it, right? And ETH's kind of like, oh, it's possible. We're unbothered either way. If it happens, it happens. But yeah, I mean, I don't think it's gonna like. I definitely don't think ETH is going to be like going down meaningfully. But yeah, I think maybe you get a few days like this of solid outperformance and some muted price action for most of the time. We'll see. Happy to be proven wrong. Sometimes not really though. I don't hold ETH, so I'm not actually that happy to be proven wrong. I wouldn't really care. But
sometimes I think that Vitalik has the right mind frame for it and just like a very long-term vision, and he just doesn't like care about like market movements and all the chatter on the timeline. He's just like holding to the long-term vision.
Solana it's like sometimes they care too much, right? Like they had that cringe ad, right? That advertisement. So yeah, I know what you mean. It's like one is a little too apathetic, and one sometimes like they get a little over their skis sometimes. But yeah,
man, you touched on Bascent. or how do I pronounce his name? Besant entering trade talks with China. What else going on in macro news? There was something interesting about the Shanghai Gold Exchange International building a vault in Saudi
Yeah, I
Arabia.
mean,
I thought that was
you have
very interesting.
some nuggets like that. Yeah, that was basically. I mean, it was not very like widely reported, but yeah, Shanghai Gold Exchange is going to have gold-backed trade basically between Saudi and China, right? So, but only for them, right? Like back in the old days, the dollar was backed by gold, right? So like you trade dollars, and then you could redeem the dollars for gold. So they're not China's not doing that, but like they're doing it like for one country for probably like just oil or something. And then yeah, so the trade for when China wants to buy oil, it can be denominated in RMB. I think that's already happening. And then now, like, so the idea would be like, okay, we can swap the RMB for gold, right? Like that's why you would do that, because they probably wouldn't want to hold RMB, right? It's not as good as US dollars. So, but then the next step, it's like, okay, but what happens if like you don't accept the RMB for gold? So why would Saudi Arabia want to do that? So it's like it's like a measure of reassurance. It's like, okay, we'll let you store the gold in your own country, so you can actually take it anytime you want, and there's no problems, right? Like that was the whole problem in 20th century with the gold, is like the U.S. just stopped letting people redeem the dollar for gold. So now it's like, okay, that's actually impossible, or that's the idea of why they would build this vault in Saudi Arabia, presumably for this to happen. So I mean, it's not massive. It's just it's trade with one country. Mostly just oil. So it's not like a full open system where it's like, yeah, all the international RMB can be redeemed. But yeah, it's still interesting. And you can maybe like imagine, what if that expanded to other countries? Yeah, they're very proactive. Like this is already in the works. Like China already is exploring blockchain for their international payment systems. So
Right.
yeah, it's like a fun thing to think about.
It's also like a data point in a wider trend that we're seeing, right? That a lot of like large geopolitical players are working more and more around like trying to work around the US, right? And sort of like circumvent the systems and build their own like infrastructures, relationships, things of that nature.
Yeah. I think this is going to become more clear. You'll have like the China trade and U.S. trade. So I think people have been. This is like a popular thing that people have been saying a lot. But like I think there is definitely some supporting points to that, where you'll have like a couple different trade systems. I mean, yeah, like China already has theirs. Like U.S. has SWIFT, and China already has theirs. They have multiple things. Like they have CIPS, they have SIPS. So last month it was reported that in daily transaction volume, SIPS, the Chinese one actually surpassed SWIFT in daily trading volumes, right? It was like 1.7 trillion. And they have another one, Project M Bridge. So like they're building out these like digital payments things basically with other countries. So you might have like two competing things, and then some countries use one or the other. Maybe they use both actually, but maybe they prefer one. And then so it's just these things that stick around even after tariffs. So like even if tomorrow they sign, or today they're meeting, right? China and US are meeting. Even if they like get rid of all the tariffs, like this stuff still remains, right? That gold vault built in Saudi or whatever, those trade networks, all that infrastructure still remains even after the tariffs. So it's like, yeah, it's like a side effect of when you list the tariffs so high, and then people start like trying to get around it. And even if you go back to when the tariffs are low, like all those workarounds, they still remain.
For sure. Then we have another piece of like macro news, which is PDD, Pinduoduo, if I'm
Yeah,
correct.
I read a little bit about China as well.
Yeah, that's very interesting. Let's unpack that a little bit. So I'll share the screen of the announcement, but yeah, please go ahead.
Yeah, the one that you're referencing, Pinduoduo, it's like it's like the parent company of Temu, right? Yes, yeah, Temu. But this is more for like the domestic, like mainland China market. So yeah, they rolled out like a $13 billion. Yeah, so this even got like Wall Street Journal. So I think initially this was not really reported in like Western news, but yeah, now it is because like it's kind of significant. It rolled out like a $13 billion plan over it should be 3 years, to help support the merchants, right? So like maybe because they ended the exemption that right where when you order something on Temu and it goes in the mail on a plane, um, like it's exempt from customs, right? If it's under $800. So even like the existing tariffs, right? Like the small packages were exempt from that, but they stopped that actually. So like the little packs from Temu or Shein or whatever, yeah, you're supposed to pay tariffs on them. So it's like, okay, how are these guys in China going to like survive if Americans can't like buy direct from China? So it's like, okay, this is one thing to do. Like you have the dude, this is like the equivalent of Amazon, like rolling out this, I don't know, like, I don't actually know how exactly how it works, but it's like an incentives thing to help keep these merchants afloat amidst this kind of like uncertainty, right? So it'd be like if you saw Amazon rolling out, I don't know, like 13 billion in China. In the US, it'll probably have to be like 100 billion or something, right? More money. I see popping this in there. But yeah, I think Amazon hasn't done anything like that yet. Or I think I saw something where it said Amazon is going to like put the tariff price on their website, like so you know how much of it is caused by tariffs. So I don't know if that's a good or bad thing. I don't know. Yeah, Kirk, let us know if you if you see that on Amazon. Maybe you can check it for us later, bro. I don't know.
Damn. All right, that's interesting. So, all right, moving on a little bit from macro. Let's move more to crypto. Think we got a few things to discuss. Could be fun to start off with Maple. Maple has been listed on Binance, which is pretty huge. And I think it's interesting for various reasons. So and we already, it triggered some price rallies and trading volume spikes. This the announcement, nothing major, but
yeah, Syrup and Camino both actually. So it is because those are two like
right. Remind us what Camino does.
It's Camino like the Alea of Solana.
Yes, it's like the top lending market. Well, it used to be MarginFi, but now, yeah, it's like the top lending market on Solana. So it's like, yeah, I think it's like a good precedent for Binance, right? Instead of listing some random meme coins that no one's heard of, like they were, remember that they were listing like the wrong memes. Like it was the one that's spelled differently, and then no. So it's like they're going back to fundamentals this week, I guess. I don't know if it'll stay like that, but yeah, so I think it's good to see some like more fundamental projects that have some real. Well, the tokens might not have real utility, but the projects are not. They're definitely not memes, right? So.
Yeah, I think that's like a really interesting timing, right? Like, we're definitely seeing like this wider like industry shift right now to more institutional type plays and RWAs and things of that nature. And this definitely seems to be playing into that, which I find very, very interesting. And
I guess the legitimization of stable coins as well. I remember the last episode that we had Kirk on. We market was terrible. The only thing we could be bullish on was stables and stablecoin rails. And I know there's multiple different acts. Is it the Genius Act or something they're trying to put through?
Yeah.
In America. So, stables are kind of like the saving grace in a sense where it's being taken seriously. And, maybe that gives the precedent to the fabled DeFi renaissance that everyone kind of is like wishing for, that maybe, a lot of these lending protocols maybe really do get their time in the sun after this sort of legitimization of stable coins and such.
For sure. Stablecoins definitely part of that trend. Kurt.
Yeah, I'm hoping so as well, D. I mean, I think, I've talked to a lot of founders lately, and a lot of them are not just on like the stablecoin, play, right? But like, I think just generally with like a lot of these stablecoin businesses, they're getting a lot more creative with like how they can think about like allowing the yield to flow to the token holders, or allow the revenue to flow to the token holders. And it seems like founders and like obviously their legal teams are starting to like ease up a little bit with like the sentiment kind of changing around crypto. So you're starting to see some of these these mechanisms come in, that maybe they were holding off on before, whether it's buyback and burn, or it's rev share, or some other kind of utility. So I think we're going to actually see here in the next probably the rest of the year, probably into next year as well, in the next couple of years, I think we will start to see a resurgence of these staked coins and like these fundamental coins like we talked about last time, because I think that a lot of founders are starting to come around, and they're able to do more with their token designs. So that'll definitely be interesting to see. Obviously Syrup's an interesting asset. That talk about a comeback story. I think that they got caught up in FTX, and now they're back to, I think, over $1 billion in TVL. So, definitely a good comeback story to see.
Exactly. It is a good comeback story to see, and it's like a very fundamental focused story. It kind of represents like the institutional interest. Like, it's kind of hard for like if you look at something like Camino or some of these decentralized lenders, it's like kind of hard to, you just don't know like what are institutions involved in this TVL. But I mean, Maple's whole thing is lending to institutions or sophisticated like individuals, and they decentralized the lending part. So now anyone can lend, and then the borrowers are these more like institutional clients. So there's not too many projects that are decentralized projects that are playing in this realm of like really doubling down on this institutional lending space. So I think that's really good to see. And I think Kirk's definitely right about the utility of tokens. So like I know DYDX last month, they also had buybacks. They enabled buybacks, so that's 100% of protocol revenue, like going back to the project in some way. As some of it going right to just token buybacks. So I think teams are going to be like more open to that sort of stuff. Even the teams that aren't based in the US, they have like investors that are based in the US, and then it trickles downstream, right? Like the regulation, and the investors like are a little hesitant about them. But now it's like, the US is much more open to that kind of stuff, and it just trickles down to to all these projects. And I think we'll see more utility around tokens, even around stable coins. Yield sharing, right? So as Dee was mentioning, the Genius Act was looking like the more favored stablecoin act versus the one before. I think it was just called the Stable Act. It was it had like a very specific like anti-yield component. Like, it didn't want the sharing of yield, which obviously is not great for the users, right? So I think as regulation improves, the holders and users will be able to benefit and get more of those earnings for themselves.
Yeah, and there's a ton of these big stablecoin projects engaging in buybacks now. Aave started their buybacks like a month or two ago. There's even a dashboard for it. You can see how much they've bought back. Maker's been doing buybacks for ages now. And I remember during the DeFi bear market, so many of these were like just dead in the water. You wouldn't even touch it with a barge pole. It was just like it's an expression we have in the UK. Like, I wouldn't touch it with a barge pole. It's like people who go down canals. It's like the long stick that you push. Yeah. And it's true. you can look at Degen Spartan's tweets, right, from years ago, and he was constantly showing the demise of the Maker ETH chart. And maybe we're sat in a time now where like some of these things might start their reversal again soon, because they're very simplistic things that, since the crypto natives aren't going to, heavily buy these bags, the idea is we're in this era now where, the likelihood is that you're going to hope that TradFi is your exit liquidity. As much as everyone likes to hope that these big projects will, change the world and do all these different things, what do the suits love the most? Very easy, fundamental things to understand: buybacks, revenue, these sort of things. And so, you can see it in a lot of these stablecoin protocols. And I think at the most base level, it's kind of like the easiest thing for people to understand, outside of, we're this new protocol with this awesome smart contract developments, and we do this differently to these other guys, and we're so smart, versus we make a shit ton of money and we buy our token back.
Yeah. I mean, I think it's going to be like one of the big questions, maybe this year as well. Yeah, it's like, do institutions, like the TradFi institutions, care about that stuff? Like, it sounds good on paper. It's like, oh yeah, we got the revenues, we got the buybacks or whatever, maybe buyback and burns. But yeah, maybe they just don't care about it at all. I don't know. So it makes sense, but I think you need to see like, I don't actually know like exactly what it will look like. Like just one of these large allocators, I don't know, like accumulating like one of these tokens, like Hype or something. Like, I don't know what exactly it might look like, but yeah, I think you need to see one. You need to see one, and then the narrative can take off, and then all these projects with do have some revenues. And I mean, there's actually no like there's some decent, very decent projects that have a lot of protocols. Like the fastest projects, the fastest companies in the world to reach $100 million in revenue. Like, they're in crypto, right? It's like Pump Fund, Athena, Aerodrome. Like, these are faster than like Cursor, OpenAI. Like, so it's actually, that's real revenue. That's not like market cap or anything. So there's definitely profitable projects in crypto. And then, it's like two things. Like, it's like, can that convert to the token? And then if it converts to the token, like, do large companies care? Like, I don't know, maybe they still just don't care. So I think you need to see one go. And then from there, it could be off to the races, maybe.
Well, one big company that does seem to care is Stripe, which is launching its own stablecoin. What do we make of this? Like, does this? I mean, of course, it does have legs, if you ask me. I'm just curious about what you guys think about this.
Very nice. Well, to clarify, I don't think they're launching their own stablecoin. It's like they're just they're allowing you to hold stables, right? So it's like over there it says USDC. So, but yeah, I mean, I don't see why they couldn't launch their own stablecoin in the future, right? Like, they have PayPal. PayPal has their stablecoin, PYUSD. So I don't see why Stripe couldn't also do that, right? And yeah, like, they're rich, right? Why use USDC? You make your own stablecoin, keep the yield for yourself. But yeah, this is a pretty interesting. So it looks like what's on screen is just like it's not anything crazy complicated, right? Like, you can just hold stables in your account and you can send them to other people. So it should be more simple than like, the traditional like ACH, like wire transfers, stuff like that. Or you can, convert the stablecoin like to fiat and send it that way. So seems like it's just a much simpler way to, especially for like global, like, international payments, to just simplify that whole process, right? Like, if your buddy accepts stablecoins, like, you might as well just send it to him that way instead of dealing with the banks, right? So, pretty interesting.
All right. And this seems sort of in line with I'm just like noticing Web 2 and Web 3, if you will, coming closer together again. Like, whereas the last cycle we saw like all these like crazy partnerships between Nike and NFT type projects. Not like this cycle, it's of like a very different sort of Coca-Cola, like Adidas, everyone got in. This time around is like very different. It's like this Stripe thing. Whoa, I mean, what else we got? Robinhood, and I think it like brings up a few interesting questions, right? Like, in a way, it seems like easier for Web2 companies to sort of dabble in crypto and mess around with crypto rails and stable coins, integrate them, things like that, rather than the other way around, right? Because, well, regulations pretty much.
Right. Yeah. Okay. Like if you think about it, one of the Stripe co-founders, the CEO, said that they were eyeing stablecoin project like almost 10 years ago, right? So you can imagine, like, what if they went all in on that idea and kind of shifted away from their current thing, and they went all in on stablecoins, and then like imagine like Stripe became, the next Circle or the next Tether, right? But so it's 2025, and they're much more like a stablecoin company, less of the traditional successful company that they've become. Like, yeah, it's probably harder for them to transition into the model that they built through Stripe than it is for them now as Stripe to enter the stablecoin world, right? So it seems like that was the right play to like just like even like Facebook too, right? They had Libra DM thing, drop that. But now if they want to get back involved with that, they can probably do so, spin something up pretty quickly. So yeah, it seems like the web, like you'd rather be a Web 2 giant, like getting into crypto, yeah, for sure, than the other way around, right? Like Bybit here seems pretty interesting, trying to add some stock trading. I remember, I think FTX added that like shortly before they went bust. So fingers crossed, but
was it Bybit they got hacked
cool
for the ETH?
Yeah, it was. I'm since then I'm like mega bullish on Bybit. Damn, what
maybe
a way
they
to
need to make the money back that they got hacked for, and that's why they need to bring.
I think they were able to like raise it all actually. Like, yeah, I think that like that was handled very swiftly, like that whole situation. But so yeah, we'll see what kind of volumes they actually get. Like, I don't know how much overlap. You know what I mean? Like, I don't know how much overlap there is going to be between the like existing Bybit users. Like, do those guys even care about the like gold? I don't know, but like it's different from Robinhood, like giving crypto to existing Robinhood users. So like I feel like this is kind of like going backwards a little bit, but yeah, I mean, why not?
Well, it's an interesting question, cool, right? But on the flip side of that, we are like lately like saying and seeing that like the appetite from like non-crypto retail for crypto just isn't there. Like the people are not coming. Whereas the other way, I do feel that crypto natives are maturing a little bit also in their appetite for their assets, right? And are actually looking to diversify into like more traditional assets, whether that's like, but like probably like preferably on blockchain rails, right?
Right, gold. Yeah, I think in one of our last episodes, yeah, you pulled up the chart showing like some all-time high monthly volumes of tokenized gold on Ethereum. So yeah, that seems like for gold at least, it seems like that kind of idea is kind of playing out. There's some legs to that. So
we'll see.
Yeah,
we'll see.
I mean, I think it'll be
interesting move from Bybit though.
Until everything is tokenized and on chain, in my opinion, this is like a nothing burger, in my opinion, for the Bybit at least. Like, what is really the benefit for Bybit's current user base being able to trade stocks and indexes and gold and oil directly on the platform? Like, yeah, that's good. You don't have to move to another venue to do that. That part is a UX upgrade, but at the end of the day, I think until like the stocks themselves are tokenized, for example, and it creates these 24/7 markets, right? Like you're still limited to the opening and the closing of the stock market every day, right? But once everything is tokenized, then you'll start to see that you'll be able to trade these things obviously 24/7. And I think that is the big unlock for, I guess the tokenization of stocks and like what's the huge benefit there. It's really being able to open up, flows, into these assets in ways they couldn't before. And so, this Bybit one, at least to me is a little I wouldn't say confusing. Like, I mean, that's good. That's a good development. But I think we still have there's still like the end game, right? Where it's all tokenized and it's all happening on chain to open up, that 24/7 trading. And then the second thing I was going to say, like, in terms of like the acquisitions, right, that we're seeing this cycle, Stefano, you mentioned earlier, like some of the fluff acquisitions or some of the fluff like integrations of last cycle where, Nike and Adidas and Coca-Cola were launching, these BS NFT collections. Like now I think you're starting to see like the serious fintechs, right, that have like these fintech businesses and they have this distribution in the Web2 world. They're starting to take advantage of particularly stablecoins, right, and other assets that can really like move the needle for them in an operational fashion. And I think that's really what you're starting to see a lot of, right, with the Stripe thing. Who was it that acquired Bridge? I can't remember who acquired Bridge a couple months ago, but you're starting to see like they're making moves to like improve their settlement, improve their infrastructure with stable coins. And I think you're going to start to continue to see that, moving forward.
Yeah. Coinbase and Deribit, another example of that.
Right. Yeah. I think there's actually an interesting one. Like Coinbase is very splintered across many different avenues, you could say. Like it's a peg below like the Binance and the Bybits, like OKX's. Their international arm didn't like quite take off, but to supplement like the lack of trading volumes, they have stuff like this. So obviously now they own like the predominant like options platform in crypto. I mean, options aren't nearly as big as perps. I think people like, I don't know, it feels like perps are like a more natural fit for a lot of reasons, but yeah, I think definitely like having the main perps platform that, holds what, like 90+% of the market share in the space. That's always good. We'll see like how that's recognized by like the traditional finance analysts, right? With Coin obviously being like the publicly listed, probably the main like publicly listed conduit for exposure to like the crypto space more broadly outside of just Bitcoin, right? Because if you wanted that, you just like MSTR, or they have the other one that just came out. So yeah, we'll see how this is acknowledged, I guess. But yeah, Coinbase is like, they're doubling down on that strategy of having like very like distinct business models. Like they have the options thing right now, right? And then they have their staking business. They have like their custody, their institutional custody. But so it's like these very different, like they have their hands in very different areas. Obviously Circle, that's a big one, like getting paid out from Circle for their distribution of USDC. So they have like many different areas of revenue that they're in. So it's a very interesting exchange compared to the others that are much more like, they're just less diversified, you could say. And it's not like a good or a bad thing. So I think Coinbase, I think it could be a good acquisition. We'll see how the analysts react to it.
Yeah, I guess it's also an easy way for Coinbase to start picking up loose chips off the table. With the Circle IPO coming, some people argue that,
Well, is it coming? I don't know. It got delayed.
Oh, it got delayed.
So I don't
really?
know. Like they delayed the filing because it was. Well, I think one of the big reasons was that everyone saw how much money they're giving to Coinbase. So like, I guess that could be like a good thing for Coinbase, right? It's like, oh, like people didn't know how much power that Coinbase had in that relationship. So, but I think you are right about like there's potentially other areas it's been a long time where Coin, it's been like the main publicly listed stock and to get exposure to crypto. So if you have Circle, that's obviously more like a stable coin focused one, but maybe you get some others as well. There's Galaxy Digital, of course, that's smaller, but maybe you get some other publicly listed companies that can kind of rival Coin's, Coin's positioning.
The more they acquire, it gives further exposure to the people that want to buy the Coinbase stock. The boomers that don't want to come on chain. the boomers who don't give a shit about LPs or perps or minting financial NFTs with bonding curves in them, maybe people would just look at it and think, oh, nice, Coinbase own an options platform. Excellent. I can buy coin, and now some of that might have increased revenue if options trading really picks up as the market becomes more institutionalized. So it's it's also a similar thing that you see a lot in the traditional finance world, where a lot of companies just acquire other companies, and that's how they grew so much. So it's an interesting one. I don't think that you'll see that much demand from retail to trade options compared to perps, because you can be a complete bozo and just
yeah. Perps are way easy. Perps are way better.
Who wants to look at the Black Skulls
Exactly.
equation and look at all the Greeks and understand why my options are decaying because of theta? Whereas no, I can put $1,000 of 10x leverage, boom, goes up, I make money, nice. So I think there's two sides of it. Always.
Yeah, perps might be one of like the biggest unlocks from crypto. Like actually, right? You have something like Ostium, where it's like, okay, now you can trade perps for non crypto assets. Like, okay, it's actually pretty cool, right? Like that's actually like an unlock, right? Like that's not on Robinhood. So yeah, I think that'd be cool. Like just trading like stock perps, like gold perps. Like that's pretty interesting to think about. Yeah, I mean, it's just way better than options. It's like more of that instant like gratification. Yeah, I'm surprised it's like not implemented sooner, to be honest.
Yeah, no, you're absolutely right about that. I mean,
Guys, shifting gears a bit.
Yeah, go ahead.
Last week, Token Dubai. I do want to touch on it. We had a big part of the team out there. It was a lot of fun. So, yeah, we actually supported Shard Capital with their event, which was really cool. Daniel, you were like heavily involved in that. I'll pull up the live coverage strat just because it's pretty cool. But yeah, sir, do tell. Like, what's the alpha? What are the highlights from this coverage?
Yeah, I mean, it's a good event. We'll have more coming out this week and the next week. But yeah, from the event, it was it was a very packed event. Like not just in terms of the volume of people in the room, but they had like multiple things going on at the same time, like multiple little mini conferences, like in different rooms going on at the same time. So yeah, it was great. Some very like sharp people. Yeah, high quality of people in the room, and yeah, I mean, I think it was definitely, yeah, I'd say it's the best event at Token 2049 in Dubai. So the others were good as well, but yeah, I think it was definitely a highlight.
What were your main takeaways from the panels? And I know that's a bit of I mean, every panel is on a different topic, right? But was there like a common thread or something like that? Maybe not, but I'm just like asking. Or maybe just like the thing that stood out to you most.
Yeah, I think it was a very like professional group. Like they had some panels focused on ventures, and yeah, people interested in like not even necessarily things in crypto, like biotech, robotics, stuff like that. So some people are some of these funds can be versatile. They can get involved with some of these things outside of crypto. We've seen this recently, like Tangent. Tangent Fund, like Andrew King. I think that was the most popular one. Andrew King's fund, Mechanism Capital, like investing in some just non-crypto, just like robotics, right? And then it was like a 20M, it's like $20 million check or something, into a robotics company, and it turned out very well. So yeah, I mean, I don't know, like you can interpret that multiple ways, I guess. You can interpret that as like, oh, okay, is that like losing interest in crypto, or are the returns on the private investing side just not there, or is it like you can look at it as like a growing up thing, right? Like, okay, the crypto native funds are like they're growing up, now they don't have to only, they're not only trading crypto, like they're just putting their chips, like, they're allocating like wherever the best returns might be. Sometimes it might be crypto, sometimes it might not be. So yeah, like I think it's good, right? Like it's a good look to have crypto native funds like that are actively in areas like robotics, like biotech. So especially as these areas become more important in the future, like with AI and stuff like that, to have it's like a good representation for crypto as a whole, right? To see those names on these raise announcements, on these cap tables. It's like, oh, okay, right. It's putting crypto on the, it's putting, it's putting crypto's name out there. It's like, oh shit, like, okay, like you actually do got serious guys in that space. So
Yeah, for sure. You also mentioned like biotech. Isn't DeSci basically all biotech?
yeah, I mean, DeSci, like, I think we can have a DeSci episode later on. It's a little, it's a little more degen than like normal biotech, I think. So it might not be quite like, like what some of these large investors would be interested in. But yeah, because DeSci is like, the whole thing is allowing, like me and you to invest in biotech, right? And like invest in some of these patents and stuff like that. So it's a little bit, it's like the opposite of like large funds investing in biotech, which could be good. Like it's not necessarily good or bad. It's just interesting, right? So I think we had some very degen stuff. We covered some of it, like towards the end of last year, or in the
We covered some of it, yeah. And I was also there at the Bioprotocols DeSci event in
DeSci
Token,
event, right?
At Token last week, and it totally tracks with what you're saying. Like, yeah, sure, it's like biotech, but maybe more like biohack.
Yeah,
right?
It's like a mad scientist. Like,
yeah, exactly. Like even the characters that were there, like very free thinking folks. And even some of like the fireside chats got like pretty philosophical about like the that relationship between religion and psychedelics that's sometimes covered on by certain people, and definitely hit a nerve. Was interesting. Other event we were at as well, I want to share, was the one by Radar Block. So yeah, I joined their panel on what excites institutional capital, together with Jack from Missouri and Hamza from 3POC. It was pretty interesting conversation. We covered a lot, like what are the trends and stuff, basic stuff like that. There's a lot to unpack, but to me, like the most interesting topic of conversation or part of the panel discussion was the point around like bootstrapping, like the bootstrapping your protocol, right? Rather than being like VC backed. To me, it was always like unequivocally like a very bullish thing. But some people are like asking the question if that's like, like if there's no VC backing, should you be like extra skeptical or things like that? And I don't know, maybe you should, but to me, it was always like very clearly like, obviously it's rare for a protocol to be able to bootstrap. So it's a rare find. It's sort of like a gem.
Well, it's rare for them to do very well. Bootstrap. It's not rare for them to do it, but it is very, very rare for them to do extremely well while just self bootstrapping. Yes.
Yeah, I mean, there's positives and negatives, right? And one of the things I always say, like, because I think projects get a lot of FUD, sometimes about like, oh, this is VC backed trash and X, Y, and Z, and I get that, there is some shady stuff that happens sometimes, but on the other hand, if venture capital didn't exist, half the projects in the space wouldn't exist, right? Like, so there's got to be somebody there to like fund these projects when no one else will. And so like there is kind of like a fine balance, right? And I definitely think like obviously Hyperliquid, bootstrap themselves, but that's like an anomaly, as Dan said, that's an anomaly when you find one that bootstraps themselves and then does like well. So it's I don't know. I always like to play devil's advocate when I hear people complain about VCs, because some of it is founded, right? Some of it is based, but the other part of it is that if they weren't there to take some home run bets on some of these projects, then DeFi wouldn't fucking exist, right? So anyway,
Right. Yeah, I mean, if we look at Hyperliquid and Jupiter, it's Jeff from Hyperliquid, okay, like he had a very successful trading firm, right? I think Meow. I'm not 100% sure. I think he has like an e-commerce background. Like both of them, I could be wrong on that actually, but I know both of them. It's like very, like they're doing very well before, right? So like, are most founders going to be like that? No, they're not. So yeah, that off the bat, it's like they're rolling over that previous success. So it's like, okay, they don't really need the funding as much. They can take that capital from their previous ventures, roll it over into their new thing. But there's even, I think like Pump Fund is like a good example of not needing, like they didn't raise that much. I don't think it was like under 10M. And it was a little while ago. They pivoted, I think they pivoted a couple of times, right? They're doing like NFT stuff. So before they finally settled on Pump Fund, and if you used Pump Fund before, it's not a very sophisticated thing. Like it doesn't seem like it took a whole lot to make it. But it's obviously changed like the whole landscape of tokens in crypto. So yeah, on the application side especially, like there's a lot of room for whether it's like actual like self bootstrapping or just raising some small amounts to really do some damage and have an outsized impact without a lot of funding.
But what I like about it, I think especially, is that, and 100% agree with Kirk, like let's not like shit on the VCs, like but what I do think it's interesting that, like, on the flip side of that, like it's not that VCs are bad, but like everything being sort of like funded by VCs has also like sort of created this sort of like very non-entrepreneurial mindset, in crypto, where it's sort of like, oh yeah, we're just going to like build and iterate and have like concepts for like 3 years, and the VC money is flowing anyway. So who cares? Whereas this is sort of like, hey, fuck, we got a runway, maybe like 6 months. Let's get like an MVP out, start generating revenue, and take it from there. And that's what I do love about like this whole, I don't know, maybe call it like a little bit of a mini trend. So 100%, like both ways are legitimate. I think it's just healthy for us as an industry to have those come back into balance, or come into balance in the first place.
I guess if you've got Berachain on one end of the spectrum, you've got Hyperliquid on the other side, right? When Bera first was like pushed into the limelight, you collect these NFTs for the chain that doesn't exist yet. It's a fake chain, whatever. And, that really had a sense of the community behind it, this sort of diehard cultish behavior and owning these NFTs of JPEGs of bears smoking weed. But then I guess the kind of irony of it was that they had raised substantial amount whilst in the background painting this picture that it's community led. We bought the NFTs. You're all going to eat on the airdrop day. And then obviously there was loads of FUD around, I think, was it people with a locked capital could like claim their rewards through the BGT and dump it. And then on the flip side of that, a lot of people ate well from Hyperliquid, and in the background of it, you've got the assistance fund buying the shit out of the token constantly. So it's like this spectrum, right, where everyone likes to focus on how amazing Hyperliquid was, and then, Berachain, great example, VC funded, tokens down only. But probably there is a middle ground where you can raise money, but at the same time, people got to realize, like, these VCs are throwing all this money at these projects. They wouldn't be able to continue throwing money at them if they weren't essentially dumping on exit liquidity from the crypto natives. Because, if they're buying a token at 5 cents on the dollar, and then even if it's down only on the day, still they're making money. Like, I bet still the early seed investors of Bera can probably still dump their tokens at a reasonable, profit. So it's a tough question, because without it, like Kirk said, there'd be no projects. If everyone tried to be hyperliquid, well, it wouldn't work, because hyperliquid came at the right time where people were sick of all the VC funding, high FDV, low float tokens. Maybe eventually we might swing back. If everyone tries to be self-funded, maybe most projects won't even get off the ground. So I think there's a fine line between what truly is a good project that substantiates having funding versus something that's community-led and just built from the ground up by people who already made a shit ton of money, like Hyperliquid.
Yeah, I mean, I think the best thing is good to highlight the incubators, like Alliance DAO, stuff like that. Much more focused on like these smaller ticket sizes, very early stage, small teams, maybe even just like solo, like one developer. Yeah, a lot of this stuff is like you might call it vapor, but like, yeah, some of it turned out to be Pump Fun. I believe Pump Fun was incubated by Alliance DAO. So stuff like that, where it's much more focused on the apps. And then if they fail, they fail, but they fail fast, and they fail without raising like hundreds of millions of dollars, right? Like Move or something. So, yeah, I think definitely good to appreciate the incubators out there. Yeah, I think you mentioned Bera earlier. I think the most egregious example is Move, right? So Hyperliquid is like the best case scenario, like no VC, and then Move is like the worst one, right? It's like, I think it was like $900 million raise or something. It's not even sure if there's proper demand for the first two chain, which is like Sway and Aptos, the first Move chains. It's like, is there so much demand from users, developers, and liquid market investors for those two that like it's overflowing and that you need a third one like Move? It's like, I don't think so, but there's clearly demand from the VCs to fund something like that. But yeah, so, and then, in the end, like a few guys can walk away with 8 figures, and yeah, it is what it is. So
yeah, you have the on the extreme end of the spectrum, you have the high float, high or low float, high FDV type coins, right? And the VC games being played there. You have things like Initia with the whole, the VCs were able to get, stake their locked TIA and get all their, liquidity that way, basically. I mean, there's examples of it, right? Where it's kind of like very predatory on retail. And like, I think something like Berachain's almost like, I wouldn't put it in that bucket, like Dan said. I would put it more like in like maybe the middle, right? Where like, at least for Berachain, I can say, hey, at least they're shipping something new and novel. At least they actually fucking delivered it, and people complain about the price of Bera, but people are making money hand over fist on the chain. You know what I mean? Like there's insane yield opportunities on Berachain, as a result of this proof of liquidity, concept that they've created, right? So like there's economic value being created there, right? And I think it's on the investor I mean, obviously you've got to analyze these things and try to make your own decisions, right? But I definitely agree there's a spectrum, but yeah, I would agree Move is probably the shittiest example. They're on my loser of the week. I'll just say it now.
As I was just gonna say that I'm betting everyone wants to take Move as the loser of the week, but since you kicked it off, Kirk, like you claimed it, you got that one. Loser of the week. I guess I don't have to ask why. Like we touched on it, it's like pretty clear. What's your winner of the week?
Man, winner of the week. This was a tough one. Because I think there's like a couple projects that I've seen they're absolutely crushing it. I had Euler on here because I think Euler, kind of similar to Maple, has had like a crazy comeback story. They just launched on Avalanche, and I think that they got like $100 million, in TVL on Avalanche in like a couple of days or something crazy. So I was going to say Euler, but then I debated. So I'm splitting it between Euler and Morpho, because I think Morpho is also crushing it in terms of like they're killing the distribution game, right? Like they got the Coinbase integration, they got the Trust Wallet integration. They just got a mini app, I think, on Ton, on Telegram's chain. They're really looking at like the distribution of their product very, very carefully, and I think that they're going to do very, very well. Not that they already aren't, but so it's split between two competitors. It's Euler and Morpho. I'm splitting it between those two.
Yeah, for sure. Interesting choice. We'll see. We'll see who wins out in the end. But definitely interesting race between those two. D, your winner, your loser of the week.
I could easily sit here and take the easy option and say Hyperliquid. Everyone loves Hyperliquid. They brought the new staking tiers in, so the fees have gone higher. The assistance fund is buying back even more. But the believer in me, I've said a lot of bad things about Ethereum over the last few podcast episodes. And, I want to believe, I want to believe that this is the end of the pain for the .eth. DeFi Renaissance is around the corner. Everyone was consensus. ETH outperformance means it's the end of the market. We saw Gainsey crashing out over the price of ETH. Did it mark the bottom? So I'm gonna put myself out there. I'm gonna go for it. I'm gonna let myself be slaughtered in a week's time. If I'm wrong, crucify me. I don't mind. I'm gonna go ETH. I'm gonna go ETH because I just think, people just were hammered into submission. Long-term ETH holders, you even saw it on Look On Chain, ICO participants who'd held for years and years, dumping large stacks of ETH. Big players in the market turn their back on it. And maybe there's a small glimmer. It's the movie where the ETH is like Andy Dufresne crawling through the pipe of shit in the Shawshank Redemption, Maybe ETH has finally made it through and we're going to get this wave of stablecoin legislation. The underlooked aspect that ETH has never been down as a chain. It's continued to work in the background amongst all these different things. Multiple stablecoins depegged, huge liquidations like the Curve hack that we saw a few years ago, the FTX Luna fallout, everything on chain functioned. Oracles weren't paused. Machines weren't switched off to prevent things happening. And I think there is a merit to that, in a sense, that it just functioned as it was built. So I'm putting myself out there for that. Loser of the week. Oh, man, it hurts me to say, but I think I have to say Berachain again. I was a huge believer in Berachain. I loved the proof of liquidity. I farmed all the NFTs. I bought a BitBear, all right? 2022, I started that trade, right? So, I feel like I can say this because I was relatively early to jumping on that. I had so much promise, so much. And I really thought that it would be the one to bring people from outside of the crypto realms in. But instead, in a way, it's been lackluster. I think there's still a lot of good things that could probably come out from what they're building. But the sort of, the lack of transparency around, were people just dumping rewards from locked tokens or not? I don't know. So that's me. ETH. Yeah, it was like, so you had the Bong Bears, which were like the first collection, and then each collection rebased into another collection. So if you owned a Bong Bear, you got a certain amount of the next one. Maybe it was the Band Bears, then Baby Bears, then Bit Bears. And then by owning the Bit Bear, you basically had an allocation to the airdrop when the airdrop came out. But ironically, if you'd have just dumped it before the airdrop, you would have made significant amounts more money. I mean, if I'd held on to it now, if I'd still held it now, I probably would have even lost money from buying it in 2022 when ETH, well, luckily I didn't, but That was basically what it was. It was like an NFT with utility, with all talk that you could stake it, and maybe you'd be part of like a validator node with this NFT. There was all sorts of bullshit involved with it. But yeah, it was a trade I was early to, and for once I think I kind of got out at the right time, but had high hopes and high promises, you know.
Yeah. Yeah. Well, hopefully, I think the proof of liquidity thing hurts too. Like it's a complicated, it's complex, right? And I don't think that they've perfected the messaging around proof of liquidity yet, and they really need to. The only thing I have faith in their team though. Like Jack Melnick, who's their head of DeFi, is like a Chad among Chads. Like trust that guy. Like he's built products in the space, have been very successful. When Polygon was in their heyday in terms of DeFi, like he was in the mix there, right? So like they've got people like this on their product team and on their ecosystem team. So I think they'll figure it out eventually. But yeah, I mean, I feel for you, D. At least you had the balls to get in the trade, man. I fucking mid-curbed it.
I mean, I got in and I got out. You know, I didn't lose money. I didn't, you know, it wasn't a lost experience, but it was one of those where the degen in me said no. You know, hold on, it's coming back. You know, you're right in the long term. But then the rational side of me that's felt pain of tremendous bear markets from 2019, 2017, I was there and I thought, you know what, I'm not going to put myself through this again. I've made my money. I'm getting out because you can make the same mistake twice and get away with it. You make the same mistake 3 times, you may as well just put the fries in the bag because you've got no other option. You know, it's the definition of madness, doing the same thing over and over again and expecting different results. So at least I kind of had a bit of self-development from multiple cycles in this market.
God
I
damn.
would definitely say that putting the fries in the bag is madness for sure.
He got burned on the Bears, man.
No, I didn't get burned. I didn't get burned.
Okay, but you got like mentally. It sounds like it took a mental toll.
No, I didn't get burned. I was just like sad that it didn't like build into the expectations that I had before, whilst having have done such a long-term trade on it. So like I still got out in profit and you know and everything, but I had very high hopes. You know.
You're really hitting us with sayings and expressions this episode. I love it. Daniel, who else should put the fries in the bag this week?
Let's see. Well, for I mean, I don't really have a loser. Like Kirk already took it. Yeah, I was gonna do Move already. I mean, it's just down. Yeah, it's down like 35% on the week or something. So they're just not like. I think they're still trying to continue. Like, you know how it is with the foundations. Like they're never going to officially like shut down or whatever. Like how a traditional business would, right? It's gonna get ridden out for a while. So now, yeah, their BD guy is at the helm. He'll be the CEO. There's another guy that'll be the president of the foundation. So we'll see. Yeah, it's obviously not a good week, both in terms of price and in terms of just like, you know, all that internal like co-founder drama and token drama, all that stuff. So yeah, it's moving down. It's moving down. The winners is a little like, I don't know. I could do Syrup. Obviously, we recently released a thesis report on Syrup, and then you know shortly after they had the Binance listing, but that's a little cheap. It's a little cheap, right? To just like you know piggyback off the listing. You know, so it's like low hanging fruit. But I'll say Bitcoin. It's up. I mean, today it's not as up. It's not up as much as ETH, but I think there's going to be some new sources of demand for Bitcoin. It's the only thing like you have that the recent MicroStrategy like copy thing, right? 21 Capital. We covered that in the previous episode. So you're going to have like new ventures spinning up to accumulate Bitcoin. Maybe some, you know, like in 2021, you had the whole tech companies like putting Bitcoin on their treasury. That whole rumor, like Tesla did it, and it was like, oh, is Apple going to do? So I think like that could come back. You obviously you'll have like even companies not in the U.S., like some regional companies that are publicly listed. Japan has one, Metaplanet. So you might see like, I don't know, maybe you can have a Korean one. I don't know. So, but then even outside of institutions, you have like the whole government thing, right? So like what we touched on earlier is if the trade is genuinely fracturing between China and the U.S., and which like it seems like it actually is. It's not like a predictive thing, like it's already happening. Then, yeah, how are people? Do you want to hold like a bunch of dollars? Like, do you want to hold any currency that's like issued by one government that can be potentially like manipulated or whatever? So obviously, gold has done very well. Okay, so what's the next step beyond gold is BTC. So maybe if even like a few percent of the money that flows from these sovereign countries to gold can go to BTC. I think like Pakistan appointed CZ as like their crypto guru guy, right? Like crypto advisor or whatever. I don't know what the official title is, but yeah, you might see some stuff like that. So I think no other altcoin has that setup, right? Like no other alt has that like institutional and government like potentially showing interest in it. So BTC winner of the week.
Man, CZ as the crypto czar versus David Sachs as the crypto czar. Who wins that battle? I don't know.
Yeah, exactly. Like they're not accumulating ETH, right? Like they're not issuing new laws to buy to make an ETH reserve, right? Like it's only Bitcoin that's on that list. So yeah.
How about you, Stefano? Let's put the pressure on the moderator. Come on. You've been at token 2049. Come on, drop some alpha for us, Mr. Moderator.
Take the fries out of the bag, put some ketchup on them. Let's go.
You see anything bearish at token that like made you think like, oh, okay, all right, I'm bearish this project now after what I've seen with my own eyes?
I have one for you. I'm not going to say it, but it's related to bearish. And I'm not going to, you know what I'm talking about. I think I'm not going to say it though.
No, so what I'll say is like maybe like it's a bit of a more general note, but it came up like in that panel discussion with about like institutional capital and like at dinner tables it came up like the question of like as a project, when is a good time to do like TGE and like the whole thing is that the point is that like I think some projects are trying to gamify or like game the system, I should say, a little bit too much, and they're like a little bit too concerned with like external conditions. Definitely, like be aware of like the market conditions, know what's going on around you, but like if they're overly focused on that, it's like such a it's kind of like you're not really focused, like you're not betting on your own horses, if you will. And I find that kind of like a bit a bearish signal. So that's kind of something that came up. I guess it may be like a weird to pick that as a loser of the week, but you guys are putting me on the spot. I got to be creative here, man.
All right. Bearish teams that are delaying their TGE for market conditions. No, it's a good point. Yeah. Like the market conditions matter, but there's like in the downturns, there's always teams that can outperform, right? Like what did we have in April and in March? We had Maple Finance doing very well. Euler was doing very well. Obviously, like perps protocols can benefit even from like the down, those really sharp downward price action. So yeah, I mean, you have winners even in these like very like bad market conditions. So you can try to be one, right? Like, or Zora they just like made a new narrative, like they just made it up. And yeah, the market conditions weren't perfect, but they got a lot of mind share out of it. And when the market conditions are better, maybe that'll pay off. Seems like they weren't too concerned about market conditions. So yeah, I think definitely makes sense what you're saying.
I would even go further and like, I don't have like data points to back this up or anything, but I have a hunch that like true like star protocols, they actually set themselves apart by outperforming in sort of like downturns or kicking off like a bull market when it was like a bear market or downturn before that, right? Like Athena is like a perfect example of that one. And like all the ones you named right now as well. So sort of like, yeah, okay, like if like everything is going up, now you launch your project, it goes up as well. What does that say? Like nothing, you know?
Yeah, no, it's a good point. Like positioning yourself in the not even necessarily a bear market, but like positioning yourself when the market is down and not froth, right? Like Kirk was saying with Morpho, like stuff like that, like securing all these distributions, securing all these integrations when the market is not so hot. And then when it is hot, like all of a sudden you're in a better spot to catch more of those flows ideally. So yeah, you're definitely onto something around like these doldrums, like these market doldrums. It's like an opportunity to set yourself up to catch more of that capital when it comes back. And we've seen it.
We have another expression in English, the King's English: a rising tide lifts all ships, right? So, when these conditions are great, you could put a dartboard in your home with a list of different projects on and throw darts at it, and wherever it lands, you buy that project. You're probably going to make money. But as someone who's, spent time and stayed in crypto during the terrible bear markets, and that's probably why I'm so crazy anyway, is that, they do really weed out a lot of the tourists and people who just came in to make the quick buck. And it is so slow. The market crabs and you think there's never anything that's going to happen, right? One example is, but just before the big ETF announcement and how that sparked a big run up in the market, there was some incredible on-chain airdrop opportunities on Solana. Before that, I mean, a lot of people ate hard from Jito. I'm pretty sure even Hyperliquid itself started its points campaign when the market was still relatively quiet. And so, even if you'd have just hit those two relatively early, you probably would have outperformed most people on CT, most people even in crypto. So, no one ever wants the music to stop, but it does eventually. And it's there's an Up Only episode where I'm pretty sure Kobe says something like, you have to stay and just enough interested when the terrible bear markets come. You keep just enough interest where you can catch some of these things, but not so much that your whole daily existence is just crushed by all these bags you had that were worth 10 times more. And think about it, when prices are incredibly low, everyone's been cleared out. Truthfully, no one wants to buy. Nobody wants to put skin in the game because they're like, oh my God, it might go down another however many percent. But, that's where champions are made, in my view anyway. If you've got to live through some of these to find these opportunities. And a lot of really great projects have really great airdrop campaigns during these periods as well. So, for the people who joined who this is the first cycle they've been through, most of you won't survive when the bear market comes because you'll be so crushed mentally. But those of you who are crazy enough or motivated enough to just stick with it, even though day a week, 2 days a week, just keep your eye on things going on. 3-4 years later down the line, you're probably going to be in a great position. And I think that's one of the most overlooked things in all of crypto is that you simply just have to survive when those times come. You don't have to be a super, super duper smart quant who's doing all these complex models with long, short, delta neutral to survive. Just don't blow up, buy when no one wants to buy and sail into the sunset,
Keep it simple. Keep it simple. And it's an opportunity in the end, it's an opportunity. You got to treat it as such. Guys, on this note, we're going to close it out. Thought it was really cool to have all Alea Research team episode once again. Get the team back together and chop it up.
Looks like it's about to hit 100K. We're right, 99,900. 80 or something like that.
We want to do that on air. Maybe we should stay on a little bit longer.
This is the catalyst.
We're gonna close
this
it
live
out,
stream
guys.
was the catalyst.
Ethan's at 2K, so okay, that's something. That's something.
Hey, maybe I won't get crucified.
Wow.
Yeah. Well, they just heard D's motivational speech just now, and they're like, "All right, I'm going to go fucking build
Guys,
Bitcoin."
Kirk, everybody caught that, right? All right, guys. Thanks for coming on. It was awesome. Good to catch up again, Kirk. Great to have you back on. Yeah, thank you for everyone tuning in. If you want to catch us again, we're here back next week, same time. If you don't want to miss it, put on your notifications. If you didn't catch the entire episode, of course, you can always watch it back on X, but we're also on YouTube. We'll have it out this episode tomorrow on YouTube. If you prefer that platform, you can go there as well. That's it. Catch you next week on the next Market Cap.
Thank you guys.
Take care,
Thanks
guys.
for tuning in.
Talk to you later.